Hey everybody, hey traders, Chris Pulver here. Welcome back to the Pulver Report, where we trade to be profitable, not perfect. Today's video is completely unplanned, but I want to get it out there on the YouTube channel. Call it a bonus, call it a market minute, call it a market snapshot, whatever. Here's the deal. The markets have been crazy. Now, we have been keeping tabs on things and trading accordingly in the Flex trading room, in equities on demand. I'm trying to make money every single week. I'm trying to make money as much as I can. I'm trying to take the least amount of risk and focus on what is working to generate income, okay? But we know this. The markets can be insane at times. The markets can be irrational at times. And we knew that going into 2022 was going to be tricky. We're coming off of a 14-year bull run. We're coming off of a, engineered recovery in 2008. Again in 2016. We had the market hate the fact that they're raising rates in 2018. We had a crash in 2020 that was again engineered. Thanks bailout, thanks COVID, thanks recovery plan, to the point where now we have more money supply, higher inflation, where it is crippling the consumer. And people are getting angry because life is more expensive and stuff is more expensive. But that's just inflation. That's just the economy. That's just what we've created already. That's post-COVID. Now we have Russia and Ukraine. You throw in new geopolitical tensions and the market kind of loses its compass. And so I thought it was important to acknowledge this, talk about where things are at. I will show you my platforms, my broker accounts, and see what I'm doing for the next 10 days, the next 30 days, the next 60 days. Here's what's important to me. I have three categories that I'm going to focus on, right? I have dead capital, I have free capital, and I have working capital. Now, I'll explain. The dead capital is what's already tied up and allocated. Now, some of that is long-term where it just doesn't matter. I dollar cost average, I add to it, and that's roughly 15 to 20% of my account. Okay, I don't worry about it. The P&L fluctuations don't matter. The highs and lows, the levels I want to buy and buy more at, I just keep adding to it. I also have dead capital that sucks right now, and that is mostly in SPACs, special purpose acquisition companies. Now, since 2020, I traded a lot of SPACs, just like I've traded IPOs and made a lot of money. But since 2021, we've seen SPACs turn for the worst, and they're down into some terrible levels. And a lot of them are down even below their initial price when they officially launched the SPAC. So why am I not touching those trades? Because my break even is only a few dollars away. But they're so cheap and they're so inexpensive. They've been beat down so badly that I'm just not going to close them. And it's not a ton of capital, but it's enough where I'm noticing. Case in point would be a company like Skills. Read StockTwits update, and Skills was way off on earnings. Their stock dropped like 29% after market. And today it's back up where it started. But going into yesterday, my break even on Skills is like $7, and the stock's trading at $2. So do I close it because it's down a bunch? Or do I just wait and see, does Skills have the ability and the fundamentals to get back to be an $8 stock, a $9 stock, a $10 stock? I'm choosing for the latter. I'm going to wait it out. And some of these SPAC plays might actually be real companies that stand the test of time. They might be able to produce some profits where the market's like, oh, it's not just crap on all SPACs, and we can actually turn this into a reasonable stock. So I'm not looking to hold them long term, but I need to know my break-even levels. And if I get above that, I'm willing to exit out and get some of that dead capital out and focus on the long-term stuff. Next up, we have working capital. This is what I put to work every single week. I'm in Forex trades, building positions, taking some trades off, adding more trades in, adding on breakouts, adding on pullbacks. That's working capital that I'm constantly closing for profit, getting back in, reloading positions. Same thing in stocks and options. I have capital every single week with options expirations. Am I trading credit spreads? Am I trading Jade Lizards? Am I going to take ownership this week? That working capital is either generating income for me or it's getting assigned and I am reworking, repairing some of those trades. So I'll show you that in my broker platform. Then we have free capital. Free capital is what I have available to keep trading. And right now, I am putting a premium on free capital. That to me is the most important thing over the next 3 to 6 months because I want to focus on what is working best. What is the best sector to be in? What is the best group of stocks to be in? What is the best play right now in the overall market? Should I be in gold and commodities? Should I be hedged and anti-inflation? Should I be focused more on Forex right now so I can be nimble and trade both ways? Should I go all in on cryptos? I don't know. I need to figure it out. So what I'm going to do today in this video is just address things, okay? You can still join me live, like I said, tomorrow at 9 o'clock. I'll be live for the Pulver Report as usual. But I'm going to show you how I'm going to calculate my break even. I'm going to work on the spreadsheet over the weekend. I'm literally taking every position that I'm in from A to Z, and I'm going to calculate my break evens and where I know, do I want to get rid of the stock at break even or better? And if so, what am I going to take? A couple dollars a share? Do I have bigger profit targets? If we see a major recovery in tech stocks, we know that tech can be way more volatile than consumer non-durables, or more volatile than, financial stocks. So if I'm going to get any short-term profits, maybe it's a recovery in tech. I'll go to the charts now. Let's kick this thing off officially. Let's get into the charts and the broker platforms. We understand there's risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether you're trading stocks, options, futures, forex, cryptos, you know the deal. S&P, crazy gap to the downside, and it filled and then some. Overall close today was 1.5% up. I haven't even looked at the news headlines. I don't even care what they say. If everyone's thinking like the bottom is in, okay, cool. This isn't necessarily at a technical level. We don't have past resistance becoming support. We don't have pockets filled. This isn't even a 127 Fibonacci extension. If we go from high to low like so, we're sitting less than a 1.18, less than a 1.27. So I think that today's little relief rally might feel good, but I think this move gets faded. All right. If I'm wrong, okay, fine. Maybe this is a little bit of a near-term bottom that ends up coming back up higher. And take a look at the heat map today. This is what was pretty staggering. This money flowed into what? The biggest tech stocks. It's like the world can't rid itself of FANG, right? FANGMAN, Facebook, Apple, Amazon, Microsoft, Google, can't get enough of it. And we had tech recovering across the board. Now I'm looking here, banks, financials got hit pretty hard today, right? It was like a risk on growth day, which was kind of crazy considering we've been risk off for the last several weeks. We've been risk off to start the year, but it is what it is. A lot of volatility, a lot of money coming to the markets and just pumping that thing back up. It could be a relief rally. It could be pump it up to deleverage and de-risk once again. But for the day, it's a mixed market, but pretty impressive nonetheless to see all the crazy volatility. All right, so what am I doing? Well, let me get into my broker platform and let's take a look. So here's one of my accounts. And when I started today, this was upside down 20 grand in the day. And then it's finishing right now, post market still running at 71,000. So I've had about a 90 plus $1,000 swing today. And it's crazy. All right. Now I'm still upside down. This is kind of my working capital. Some of this is dead capital that I'm going to continue to work and manage. But I'm also generating some income with some of my options plays. So this week, because we had volatility so high and some of these pushes were so aggressive, I actually closed out some really nice profit this week. I closed out a nice long put on Netflix for about $30. I closed out a Coinbase long put for $55. And you know what? The recovery on some of these, like by March 18th, if Netflix is back above $410, I won't even take assignment. I'll have profit from the remainder of the credit spread and profit on the long put, and I'll make like $3,000 or $4,000 and never even own the stock. Coinbase is going to expire this week, and I've got to break even at $200. And the trade right now, Coinbase is back up. I'll take a look at the chart here. Coinbase is back up to 179.56 was the close. Post market, we're down to 174. So again, I'm still interested in what happens tomorrow. Today's candle is something, but tomorrow's candle will also close the day and the week. So if tomorrow's candle is red and the weekly candle is still red and the weekly candle looks something like this is probably not a good sign for what happened today. If the market closes like this for the day tomorrow, and then it closes for the week with a long wick and a long bearish move, that's not a good sign for what's to come because it probably just means more downside. Okay. So I don't get excited about stuff like this. I just trade the markets. But because it's been so wild and crazy, and we've been like fretting and worried and anticipated, like, oh, what's going to happen to Russia? They're going to invade. What's oil price going to do? It did what we thought. It hit $100 and then it reacted. Okay. Now, did I short oil at $100? No, because I thought we'd go through it. I thought we hit 105, hit 110. Oil prices. Oil spiked up today. We had a high at $100 and change, right? Just shy of 101. Now, look at the massive rejection. Now, does this mean the top is in on oil? I don't think so. You can look at all these commodities and see the exact same thing. You can look at wheat, you can look at soybeans, you can look at corn. They all had these crazy gaps higher and they closed red on the day. We had gap highs on oil that filled. We had gap highs on commodities that filled. And it was just a wild day. All right. Take a look at the 10-year note. TNX. This is what's been tracking. I've been calling this kind of the end of the bull market. We had a massive push lower and then the bulls are back in control. Take a look at Forex. This is the day's trading. We had the market do this. We had risk off all day, and the afternoon was the opposite. So the only exception to that would be we had the dollar extended its run a little bit higher and then started to fade at the end of the trading day. So you can see that our safe havens, the yen, the dollar, the Swiss stayed pretty stable all day, but it was still a safe haven pair that was elevated over others. But your JPY and your dollar strong all day and then faded back down. You had your Aussie, your pound, your euro, your New Zealand, all weaker that started to retrace and finish at break even essentially. So the day itself started here, nearly ended here, and it was just a really wild and volatile day. And we talked about that this morning in the Flex trading room. So could it be worse tomorrow? We'll find out. But fortunately, Wall Street closes 4 o'clock on Friday. Forex closes 5 o'clock on Friday. The only concern might be cryptos. Cryptos trade 24/7. So is it a nasty weekend in cryptos? Maybe. What's Bitcoin at? Bitcoin is sitting at what? We're sitting at 37,995. We had a massive spike high and low, a very big indecision candle. And by 8 o'clock tonight, this is going to be a new candle. So is it just a high low that the market has to figure out what's going to go next? Are we going to break the high? We're going to break the low? We'll find out. Where is the next close in confirmation? Is it breaking to go lower? Is it breaking to go higher? This could be a structure right here where the next few days in Bitcoin could be very boring until the market's going to go somewhere else and break above or break below. So back to the broker platform, here's what I'm going to do. I'm going to take all of these positions. Now, this particular account, I have all these different stocks running. I have Apple, I have American Eagle, I have Amazon, I have ARK, I've got some ETFs here, I've got Beachbody, I've got BurgerFi. Those are SPACs. Those suck, but I'm still going to hold on to them because my cost basis is really cheap. I've got some other ones. I've got some stocks that are in some nice profit, and I've got some stocks that are not so hot, right? Pinterest is one of my worst positions, but I'm not that worried about it when my break even's like $40. Pinterest is trading at $25 and change. Now, is $40 great? Well, I've got a break even here at 40.87 and 43.53. If we have a recovery, and this is what's important, I need to know what my break even is. I share this spreadsheet with everybody in my Equities on Demand trading room. This is how I calculate my stock trades, my option trades, my credits, what my break even is. If I go to Pinterest, for example, and what I've done with it, okay, Pinterest, I have had purchased shares of the stock, and then these are all of my credits that I've received from trading options. So I had a trade here that was assigned. I had credit spreads, long puts, all sorts of stuff. It's basically allowed me to drill my costs down, even though I bought the shares at $60, and again at $33, and we're trading well below that right now. I get it. I've been able to lower my cost basis by almost $2,400. Now that helps. Okay. Now over the course of 400 shares, it helps. It's brought my break even down to $40 and change, and I'm fine with that. Do I think I can get Pinterest to recover back up into the mid 40s, maybe higher? Sure. $40 is right here. If I look at this chart, I see what is a technical harmonic pattern. We have an X, A, B, C to D, okay? And a lot of times with these harmonic patterns, and I'm also looking for the right side of the trend line confirmation. I'm looking for pivot levels, pocket levels, all these things I trade. We have a yearly pivot sitting right here. That's around $55. We have a harmonic merge right in here around $55. If there is ever a recovery to put in, this would be a great spot to see some confirmation, notice some bull patterns, and have price actually rebound into $50, $55. I'm not asking Pinterest to go back to the highs. I'm asking Pinterest to stabilize, put in a low, and if we get a relief rally, let's friggin' get it. Let's see if this thing can come back to break even or better for me. If I can get $5 a share, $10 a share, I can repair that, take that working capital, take profit, and transfer that into free capital. So that is the stuff I'm looking at. So like I said, Pinterest is one of my worst positions, but I'm not that far off from break even. I also have some trades in OKTA and Coinbase. I have a lot of positions running right now. OKTA, this is a stock that I've been buying a lot of at $200. It's been working out really, really nicely. And then recently, yes, we've crashed down below these levels. Past resistance here around 141. My break even on this stock is around 195. Now, it's a volatile stock. If we have a relief rally and recovery, this should easily get back to $200 or higher. I did sell a cover call at $200. Like I said, my break even's around 195. If I could lose the stock above $200, I'll make about $4.70 a share, and I'll still generate $3,000 to $5,000 of profit. Again, taking that working capital, turn it into free capital. So that's what's going on, and this is what I'm going to do. I'm taking all these trades. It's going to take some time. This is why I'm going to spend some of my weekend doing it, but I'm going to build out my spreadsheet, calculate my break even, get my real-time price from Google Finance, and I'm going to note, am I in profit? Am I not? Because once I'm in profit, I think right now it is more important to me to have more free capital than it is to hold and hold and hold and hope for these big runs. I don't know if the market is going to make this broad-based recovery. I think we're going to have pockets of volatility. I think we're going to have sectors that do really well and sectors that do really poorly. You could argue that like, oh, it'll be easy. It'll be all energy this year. Well, maybe it is, but maybe energy becomes so volatile that once we hit $100, maybe it has to drop back to $80, drop back to $70. I mean, we have special reserves of petroleum hitting the markets now in Europe, in the US, and OPEC hates it, but maybe oil prices have kind of hit a near-term top. Maybe they haven't, but I don't know. I don't have a crystal ball, and neither do you. So what I'm saying is it's more important to me to have free capital to keep taking good trades, quality trades, and build what I think will be longer-term profits, as opposed to tie it all up, cross my fingers, and hope that it all goes my way. I think that's the whole point of this video. I'm not going to be passively trading, all right? I'm going to be actively investing, actively managing, and I think it's important that if you're looking to manage your portfolio, you have to do this too. All right. Now, if you're more long term, you're like, well, Chris, all I do is dollar cost average and I just make money. I just give it time. Cool. Then give yourself time. Give yourself 3 years, 5 years, 10 years, and you're probably fine. Right. Go back the last 50, 60 years, and you see that war and conflict and recessions and all these other things have not really stopped the markets from gaining value. But I think what we've done over the last 20 years is we have artificially created growth. Okay. We don't actually grow in a sustainable level. We print money to grow, and we take on leveraged debt that is unsustainable to grow. And so whether the Fed is, backed in a corner, has no alternative other than keeping interest rates low-ish, but then we still have to tackle inflation, it's just a really ugly environment. So I don't think the highs are going to break anytime soon, but I just want to be prepared. And I'd rather be over-prepared and find a way to get break even better and be profitable and have some free capital to work with, then be wrong and be holding and then be like, oh my gosh, the market won't pay out. Oh my, what do I do? I'm not going to be that trader. There are no excuses in trading. This is what it looks like. There's a lot of work. I'm going to go through literally every stock that I have. Am I covered? Do I have covered calls on these stocks? Am I lowering my cost basis? What's my break even? If I have option plays. Okay, a lot of these are my covered calls right here. If I have option plays, what are my expirations? What are the most pressing? What's the most important? Is it this week? Is it next week? What does the next 2, 3, 4 weeks look like? Do I want to take more trades and more staggered credit spreads? Maybe I don't. Maybe I need to slow things down and start focusing on nurturing the positions I have open, working those costs, lowering my cost basis, get those back to break even, take that profit, get that free capital back. Okay? All right, let's go into Forex here for a second. Forex account. Here's what it looks like. Pretty big P&L swing. So, again, I'm still managing a bit of a drawdown. Not a concern for me. I do this all the time. Trades that I'm in. I had a trade close out on dollar CAD for profit. I'm back in. I've got a trade right now that's just off a break even that I want to see if it will pop up a little bit higher on dollar Swiss. This is one of my biggest running positions. I'm trying to get the dollar Swiss to go to 96.50. It's going to take some time, but if it comes back down, I'm still going to add more. This is a position I'm building. I have limit buys and pending buys that were getting filled. I have buy stops up here that have not been filled. Take a look at CAD Swiss, same thing. CAD Swiss, I like this position. Euro Swiss, I like this position. These are trades that I'm in. It's in a bit of a drawdown, okay? But what am I willing to do? I'm willing to hold. My profit target is here, is here, is here. I'm looking to add more to this position. I'm prepared for potentially more downside. I talk about this with traders quite a bit. If this Euro Swiss is going to drop down to parity 1.00, I think there's some potential intervention there by the Swiss National Bank. We might drop down to the 2015 flash crash low around 98. But if this level gets hit, I'm still looking for a low to form. I'm looking for confirmation to start adding some more trades. I'll lower my overall cost basis, and my profit level doesn't really change. I'm going to take profit back here. Or I'm going to take profit at this pocket where this green line is. Or I'm going to let it hit past support, become resistance. Or I'm looking for this, and this is what we talked about this morning in Flex. If this comes all the way down, comes all the way up, I'm going to buy that pattern. And I'll take profit here, and then I'll get back in, and I'll work a trade where I get a nice chunk for wave 1, and a nice chunk for wave 3, and possibly a nice chunk for wave 5. And this comes all the way back up here to like 112. But it's going to take time. It's going to take time to plan and build. So little by little, I'll pay attention. It's just a trade. It's just a position. It's just a currency pair. but I'm going to watch and see how this price unfolds. CAD Swiss, we talked about this week in Flex. I've been filled on some of these pullback trades, which is good. I have more pending orders down here. I have more pending orders up here. So if price pulls back, I'm getting filled. If price breaks out, I'm getting filled. My profit target at the minimum is coming back up to these highs. And I think I can make that trade very profitable. So I'm building this position up. If we get to my profit levels, I will take profit. I will assess whether that becomes a sell trade from there or this continues up with a higher time frame structure that I see. Okay, so I have managed to grab some profit this week. I've had a nice P&L swing. It certainly was a lot better than, oh my gosh, Russia invades and it's getting worse and I'm just upside down all day and it's all red and it's terrible. So fortunately, we had the market, really react bullishly today, which I think was just, there's an 1810 saying from, I think, Nathan Rothschild: buy on the sound of cannons, sell on the sound of trumpets. And literally, we had cannons today. We had rockets. We had missiles, whatever. We have an invasion. It's not good. I don't know what type of game Putin is playing. I think that this is something that's an anti-dollar play. This is anti-US, whatever. If we can really isolate Russia and we can, put the squeeze on them with sanctions, we can cut them off from pretty much the entire world. That's about the only way I see this, de-escalating. But if they just keep stepping and stepping and stepping and overstepping, now they're in the country. I don't know what happens, right? I mean, I don't know the ramifications of this. I don't know the consequences, but I know as a human, I don't want to see any of this happen. All right. This is tragic stuff. Nobody wants to see this happen. As a trader, it's a ton of volatility and it's not all easy to trade. Sometimes it makes no sense. Sometimes it's irrational. How do you have an invasion and a conflict and all of a sudden the market goes up 3% today? Makes no sense whatsoever, right? How does my account have this big of a swing today? Of all days, I have no idea, but I don't care. I just focus on the process and I keep trading. So if you'd like to see more about this, leave me a comment, right? Let me know. You're like, hey, I like what you're doing. I'd like to see more. What I plan to do, like I said, over the weekend is break this down, add onto my spreadsheet. I just need to know my break evens, and I'll keep a real-time Google Finance ticker to show when those candles close. Am I at break even or better? And if so, do I want to take profit? Some of my trades are moving targets. What may have started as a great trade initially, case in point would be something like Pinterest or ARK. Let's do ARK. I didn't talk about this one earlier. So what started out as what I thought was a decent trade, essentially buying in off these lows. I mean, I was buying ARK in here around $100. So around $110, $105, I started dabbling, started nibbling on ARK. I'm like, okay, well, if we have high to low, we come back up and retest the high. That's a nice little return. And then ARK just plummeted. So I have done some more trading. I've added some more shares down here. I close out for a nice long put. My break even on ARK is $80 or so. Let me check. Let me confirm that right here. So $80. Let me check ARK. ARKK. My break even is $75.51. Right now we're trading at 65. Now, granted, I started this at 110. I'm upside down $50. But now with a little bit of dollar cost averaging and some options, I'm down 10 bucks. Do I think this can recover to $90, $95, $100 past support right over here? $98. Could I hold this thing and make 20 to 25 bucks per share? Very possible. Am I asking for that to happen? No, but I think a relief rally would be great. And if I can get $5, $10 a share, that's a nice chunk of profit. Close it out, add it to my free capital, go find another trade. So like I said, leave me a comment, leave me a thumbs up. That would be awesome. This was not a planned video. Look, I show this on my Mondays and Fridays. I show you my positions. We talk about this live stuff all the time. The markets sometimes make very little sense, but we have to let that irrationality flow off of us. We have to make sure that we keep a level head, keep our wits, keep our emotions about us, and keep trading. Okay? All right. That'll do it for me. I will see you Friday at 9 o'clock Eastern Time for the usual live Pulver Report session. For anybody interested, I mentioned the Pulver Report, the weekly newsletter. If you're interested, come to the website, pulverreport.com. Check it out. Okay, you come to the website. If you'd like a top weekly pick, you can click on this newsletter, join it. It is absolutely free, no cost, no anything. Mondays, Fridays, I'll send you my best pick. Doesn't matter what asset class. It could be a Forex pair, could be a crypto, could be a stock, could be an option. Whatever I like, that's what I'm going to send. I'm tracking all that stuff. We're trading it. I'm trading it live. So I am here to help you. If you'd like to learn more about trading, if you want to trade with me live, you can do that right here, pulverreport.com. Click on the trading rooms tab. In the Flex Room, we trade everything. We mostly focus on Forex for our live trading, but we're talking cryptos, we're talking futures, we're talking risk on, risk off, we're talking flows. And then in Equities on Demand, we're trading stocks and options almost exclusively. But you know what? As a trader, everything blends together. It's all about just managing assets overall, and I'm just trying to make some money, just like all of you. All right? So if you have any questions, let me know. Leave me a comment. Like I said, thumbs up goes a long way, helps the channel a ton. I appreciate the support, and I will see you in my live sessions on Mondays and Fridays at 9 o'clock. Happy trading, lots of profits. See you soon. Thanks, bye.